Well, hello, everyone. My name is Barbara Armstrong. I am a coach with Schwab and a senior manager. Delighted that you are all joining me at the front end of this new week in the markets for trading a smaller account. I want to thank each and every one of you that is here live, and particularly those who are participating in the chats. It just brings so much great energy to this whole process. So thank you for that. And we've got hundreds of people here. And so to Paul and Marcus and ABO and APA and Josh and the rest of the gang, Ray and Frank and everyone else, thank you all for being here. We also have the privilege of having Mr. Kevin Horner in the chat. He's a friend and a fellow coach. And, so if you've got any questions as we go along, please don't hesitate to ask. And between Kevin and I, hopefully we've got some great solutions for you. I've just unfortunately had to reboot my system at the last minute, and that's why we're starting a little late today, which is frustrating because I'd really like to go about an hour and a half today because I have so many things I'd like to cover, and yet we get 45 minutes. And so we have to do what we can with what we have. And so, the things that we don't get to place example trades on, we will talk about. And so we're going to do a couple of bullish trades and a couple of bearish trades today. And we're not going to spend much time on trade management because we did a lot of that on Friday and Monday of last week. And so, we're going to focus on new things. And when we look at our account, we only have 5 or 6 trades on, and that's really low for us. Often we'll have 15 or 20 positions on. We place a lot of example trades in this class. Okay, so I've got Thinkorswim to play along nicely finally, so let's get right down to it. Know that options carry a high level of risk and aren't suitable for all investors. We do a lot of option trades in this class. Okay, so be aware of that. And if you've been trading in paper money, just know that you have to apply for option trading privileges in your live account. And so I don't want you to be frustrated having practiced, for months in paper money, and then you go to place your first live trade and it won't go in, and it may be because you haven't applied for option trading privileges. We are using the paper money software application on the Thinkorswim desktop platform. And so you can trade off your phone, you can trade on using Thinkorswim web. We're using the desktop platform. And so if my platform looks a lot different from yours, you may be on the desktop. But know that there are some nuances and differences between paper money and a live account. One is that short positions will never be assigned early in paper money. That can happen in a live account. We now do a super short market overview because Kevin Horner does such a fantastic job when the market opens. So if you want a more detailed overview of what's going on in the market, please go to Trader Talks. His talk this morning will be available in the archives probably by the time this class is over. And today we're going to focus on placing a bunch of new example trades. I have one quick announcement, and that is that if you have never been to a live event, it's how I got introduced to the world of investing and trading back in 2011. I loved attending those live events as a client. I could just totally focus. At the time, I had a house full of teenagers, and, it was a pretty chaotic world I was living in. So to go and get to just link arms with other like-minded people was transformative for me. I still love attending these as a coach, and albeit the last 3 events we're hosting through the end of the year. So consider this my personal invitation to you. These are all free to attend. You just have to get yourself there. We'll pick up the tab for your parking. We'll have the coffee on in the morning. We'll provide breakfast. We'll provide lunch. And for the market drive the weekend before Thanksgiving in Anaheim, we'll even have a great reception at the end of the day. So be there, be square. If you intend to come, sign up earlier rather than later, because these things do fill up quickly, and I'd hate for you to, get shut out. Okay, so let's go over to our small account. And, we're going to do like a 30, I don't do anything in 30 seconds. It's probably going to be more like a minute. But, if we look at the S&P 500, it hit a new intraday all-time high back last week, and we are within a stone's throw of it, another kind of little bull flag setting up. and it's moving on up to the upside, up 16% year to date. So it's hard to look at this index and categorize it as anything other than bullish. NASDAQ, you'd wonder almost if I switch the chart, in that, we have this same little bull flag happening. This hit an intraday high back last week on the 29th as well, up 22% year to date. So, pretty extraordinarily bullish since that turnaround on the 7th of April. If we look at our small cap, so this is 2,000 of the smallest of the Russell 3000, it's pulling back a little bit today, but it too is kind of just been marching up the hill for the last 6 months, up 10% year to date, not too shabby. And, kind of this last few weeks flirting with that 30-day moving average, but it too hit a new all-time high back on October 15th. And then if we look at our Dow, and what makes the Dow unique is that it's based on the price of the stock as opposed to the market cap of the underlying company, but it too hit a new all-time high. All the indices did, the three indices hit that all-time high on the 29th. And so, bullish, every which way but loose. And then when we look at our VIX, which is our fear index, that's considered to be, there's a level of confidence, according to those that look at this frequently, if it's below 20. And, we're sitting here at 17.5. So, it's kind of in the middle of the range where it's been a lot of this last 6 months. All right. Okay, so let's go. And I was really torn because today I was going to look at some bearish opportunities. And you're saying, okay, you just showed us how, bullish the market has been, but not every stock is necessarily playing along. But let's start with a couple of bullish trades, and then we can go over to what I like to think of as the dark side. But when we look at Google, it had a pretty aggressive move to the upside on earnings. It certainly beat on earnings. And then if we come back and we look at this, and say, well, Citibank has moved their price target from 230 to 310. Now, it doesn't mean that this analyst is going to be right, but 247 to 281, these are pretty big jumps. From the analyst community who spend, this is what their career is looking at this stuff, right? And so if we're thinking, okay, it looks like at least these analysts seem to be pretty bullish on Google. It's had this move to the upside, a one-day pullback. If we're bullish on this, could we look at it and think, well, could I see it continuing to move to the upside? And could we do a long call vertical? And so we're going to come to the trade tab, and we're going to come out to December. And this gives us time that, if it does pull back, or if the market in general pulls back for a few days, we could do, it still gives us time to recover. Now, what's the downside of going out that far? Well, the downside is that it may be less likely to hit the target we're looking for, which is a 50% gain. So we're going to put in, well, it now went to 255. It made the math a little harder pour moi, because 260 is 390. So we're going to put in a target of 382. Even though technically, how much could we make? We're risking 258 to make 242. And I used to want all 242, and that didn't work out so well. Yeah. So this 258, and that's why I changed the target from I want to make all of it to how about a 50% gain? That's still not too shabby. And so if we look at this and we say, okay, if we can risk up to 500, maybe 550, because this account has grown, substantially since the beginning of the year. So, our risk is that we don't want to risk more than 500-ish. So here we're risking 258 because we could lose the entire amount. And our trade management is we're going to put in a target of 50%, but if it goes down by 50%, we're going to go in and manually exit. Okay, so it keeps changing. We're going to leave that at 390. So how much could we lose? 520. And if you're saying, well, why aren't you putting in an OCO order? So if you're brand new to this, because I've explained this many, many times, I do this type of trade. I'm not saying this exact trade in my live account. And what I have found has happened on occasion is there's a lot of volatility when the market first opens. And there were a couple of times, and it didn't have to happen often for me to get the message, that I got stopped out for way more than a 50% loss. And then the market settled down and I wouldn't have been stopped out at all. And so if I get, if it hits my target and I, get hit with a 50% gain, I'm willing to fall on that grenade, but I really don't want to lose more than 50%, but so what's the downside? Well, the downside is that if you're not paying attention, you can end up losing more than 50%. So if we come to our long call verticals, we can see Google here, we're up $10, woohoo. And we have two others. So here's your daily review of your long call verticals, and here's how long it takes. Are any of these close to 50% up? No. Are any of them close to 50% down? No. Review done, and you can move on. You can go out and golf or, watch a football game or whatever. So there's Google. Now, some might say, well, if you're really bullish on this, why not do something like a short put vertical? So I go, okay, well, where might we put our line? Well, if we activate this, we might say, well, hey, could we do something around that 280 mark? It's currently sitting at 283. And would we get enough premium? And some might say, ooh, that's a little too close for comfort. I'd rather do 275. So we could look at 275. And one thing about Google is it's highly traded. So if we come to the trade tab, we could even, here we've got 7,000 contracts, a 10-cent bid-ask spread. What if we came out one more week? Well, we have a 15-cent bid-ask spread, or if we come over here, still a 15-cent bid-ask spread, that's not too bad. And we still, even on the weeklies, have hundreds of contracts. Now we have hundreds of contracts as opposed to, we have more contracts and more liquidity if we're looking at the monthlies, but this is still pretty heavily traded. So if we look at the 275, we get $1.45 for that, or $1.50. And so if we come over, to our calculator, and I'm going to switch this to calculator, because one of our guidelines is that, we want, if we're coming in here for 25 days, we want at least a 25% return on our risk. So we can make 150. How much could we lose? Well, we could lose 350. That's the difference between the $5 and the 150. So that's a 42% return on our risk. And if we come to the charts and we look at it and we go, yeah, I'm cool with that. Like, that seems like a reasonable strike. And with a short put vertical, we want it to stay above, right? And so we're risking more than we can make. And with this one, our target is 80% of the max gain. So we could say, okay, 80%, that's 30 cents less. So, we want to get out when it's worth about 30 cents. Or you could take $1.50 and multiply it by 0.2. 150 times 0.2. That's going to get you the same number, 30 cents. So when this is worth about 30 cents, when it's worth 30 cents, we'd like to buy it back. Okay. And how many of these are we going to do? Well, we're only going to do one because we're risking 350. And we're not willing to risk 700. That breaks our rules. And remember my son, when he was in preschool, and we're driving home one day and he said, I really love my friend Jason, and I really love this little girl in his class named Kelly. I think I'd like to marry them both. And I said, well, hey, newsflash, you're going to have to pick. And, you've got time. You are only 4 or 5, however old he was. And he said, is that a rule or a guideline? I'll never forget it. In any event, we have some rules that are kind of absolute and then some that are guidelines. And one of our absolutes is that we do not throw our position sizing rule out the window and go, oh, this is such a sure thing. If you hear that term sure thing, run, my friends, do not walk. And if you say it to yourself, like, go wash your mouth out with soap. Like that is stinking thinking. That's what gets you into trouble. Okay, so we're going to do one and we're going to compare this to the long call vertical. Okay. Yeah. And if you wanted an update, he didn't end up marrying either Kelly or Jason. Yeah. Okay. So that is the Gook. And we've done a short put vertical and a long call vertical, and we're going to compare them. Okay. So let's come over to ISRG. ISRG. Okay, so ISRG, like, here's another one. Big move. The analyst estimates were that this would come with $1.58, and it came out at $2.40. And again, if we want to come out and look at the analysts, and this is, not a cheap stop, $530, but, Daiwa, raised their price target $510 to $550. UBS raised it to $600. Like, that's way up here. That would be a new all-time high. Now, are these guys going to be right? Not necessarily. Rothschild, I think they just didn't want to get left out. That $5, that's a pittance, but $595 to $644. So it looks to me like the analysts are pretty bullish. And we had this huge gap to the upside, came down to retest, which is not uncommon. And it's moving on up. So, if we really come in here, if you like the technical analysis stuff and candlesticks, and I've done a series of short videos on candlesticks, and I'll show you where those are in a minute, but this is a bullish engulfing. So, we could have, technically placed that trade on Friday. If we're looking for a close above, the high of the low day, that would likely be today. Okay. So if we look at this, could we do a long call vertical? So we could do just a long call and we could do a swing trade. We might not, this is a pricey stock, so we might have to go way out of the money, or could we just do, a long call vertical again, or a short put vertical? Well, you got lots of choices. We could also buy the stock. Now, we couldn't buy very many shares, but we have $12,000 sitting in the kitty that is currently, not doing anything for us, other than sitting in the kitty. So let's come to the trade tab. And again, ISRG. So when we look at this 440 to 490, oh, that's way out of the money. 1150, 1260. So that's if we come to November 21st. What if we came out for our long call vertical and we looked at, here we have 64 contracts, and our rule of thumb, if you look at our example trading plan, is that we want at least 20 times the number of contracts that we're going to trade. This is about $2. So that's still within our realm of acceptability. And if we did the 535 and the 540, it's already halfway in between. Let's see if we get enough premium for that to be worth our while. So it would cost us $315 to get in, times 1.5, 472. 472 is getting pretty close to max gain. And so we might say, well, maybe for this one, we put in a lower target. Maybe we make it 30% instead of 50%. So somebody's saying, are you concerned about the wide bid-ask spread? Well, we want it to be less than 10%. And so 10% would be, 230 or 240. And the bid-ask spread here is about $1.50. Well, it keeps switching all over the place. 1970 to 2120. So, that's under $2. So it's within that realm of acceptability. Would we rather see it, at, a higher number? Yeah. So if we're looking at this, whoops. So we're looking at the 535, 540. Oh, I must have started with the wrong one. 535, 540, 285 times 1.5. Sorry, 285 times 1.5, 427. That's better. So, and again, 285, that's like 570. See, this is crazy. So we might just say, hey, if we can't, we're going to lock that. If we can't get in for 290, then we'll just let it go. And we're just going to do one. So first trigger sequence, right click, opposite order. So 290 times 1.5, 435. So that'll be our target. And we're putting that in with our long call verticals. Okay. Fire in the hole. Now, could we also consider a short put vertical? Sure. And where might we want to be? Well, 525 or below. So, and now, do we want to go out 46 days? Well, I say nay on that. And why? Well, we don't have enough volume. Well, actually, we do. 10, 20, 11, 40. So, that's okay. We want to be below 525. So that's 80 cents. So we're okay there. So we get $1.45 on a $5 wide spread. Now, if I come out to December, we could do now. So that is 25 days. Now I'm almost doubling the time to come out to December. Am I going to get double the credit? Well, let's see. If we come to December 19th, we're getting 25 cents more. That's it. To come out double the time? Yeah, I don't think so. I think we'll stick with November 28th, which is 25 days. And again, when do we want to exit? On a short put vertical, we want to exit when we've got 80% of the max gain. Now, what if we look at this on Friday and we've already got 60? Yeah, somebody's saying, maybe we do the monthly for November. Well, that's only 18 days. But we've got more volume here. So we could look at that. So this is 29. So let's come here and say, what if we did the 21st? $1.45. Oh, we're getting even more. We're getting $1.60. Oh, that's interesting. November 21st. So what's the advantage of this? The advantage is that your time decay is going to happen at an accelerated pace. What's the downside? The downside is that if the stock pulls back, we have a lot less time to recover, don't we? Yeah. Okay. So, but let's give that a go. So, David, good suggestion. So we're going to short put vertical. And we're comparing this to the long call vertical. Okay. Okay, now if you want to see, what's the probability of this actually working out in our favor? Well, we have a 73% chance that it could come down and touch this, give it a kiss, and then rally. We have a 36% probability that it could be in the money, which means we've got a 64% or 63% chance of it expiring worthless. Now, these are just the probabilities, and it's calculated using a pretty sophisticated model. But what we're looking at is our superlative technical analysis, right? And I say that with a smile, but you know, we're looking at the technical analysis. It gapped, it moved up, came back to retest, and it's bounced off this support level. And so we're thinking, well, it looks like this support level is going to hold. And this is why we're confident in doing our short put vertical at 525 and 520, expiring November, I think is it the 21st? Okay, I'll fix that if I got it wrong. And we're making that 525. Oh, now why isn't it showing up? Because I didn't ask it to show up. You have to come over here and say show on the right. Okay. Okay, so that's ISRG. So far we've done 4 trades, 2 on Google, a short put vertical and a long call vertical, and then the same on ISRG. Okay, let's look at CLAC and say, okay, we've done 2 of these. What if we looked at CLAC? Now this is a $1,200 stock. So might that be an issue? Well, it could be. And why might it be an issue? Well, look at the options here. So even if we're bullish on this, you know, these are super expensive, and it's also $10 wide. So if we look at this, and if we go to December, it's 12.20 and 12.40. But, and again, let's come out and look at CLAC and see what the analysts are saying. Well, Susquehanna raised their target from 745 to 1145. Citigroup to 1450 is currently at 1221. Evercore to 1350. Rothschild to 1300 from 1110. Goldman Sachs raised the price target to 1280. So it looks like everybody's pretty bullish. Oppenheimer, okay, I can say that, Heimer, raised their price target by 40% from 1,000 to 1,400. Like, that's not nothing, right? And these guys could be wrong, TD Cowen, but they all, the one thing that they agree on, although the prices are different, is that they're pretty bullish. And so could we, if you're saying, you know, like I'm getting a little bored with the long call verticals, and it's like, you know, I think, well, bore me all the way to the bank. You know, like if you have a strategy and it's working, you know, maybe you want to stick with it, but somebody's saying the bid-ask spread is too wide. Yeah, 78 to 82. So that looks wide, but really it's $4, it's 5%. So it's within our degree of acceptability, where this one that's at the money, you know, that's almost $5. So that is 10%. So it is a little bit wide. But I was thinking, how about if we buy some shares of stock? And so you might say, like, is she new? Like hello, $1,220. But you know what? We don't have to buy a lot of shares. So if you say it's at 1220, this previous high was 1284. If we did a swing trade up to 1284, the advantage of not doing an option, we don't have to worry about the bid-ask spread. 2, if it takes a while to get there, we don't have to worry about time decay. Okay, and so what if we're only buying, so $5,000 worth divided by 1221? I'm thinking 3 shares. Oh, 4 shares, woohoo! So if I bought 4 shares and I could make, like if it goes according to plan, if I could make $64, or sorry, yeah, $64 a share, that's 128, 256. I mean, we call that a base hit. In fact, we call 150 a base hit. You might call that, you know, like a double. You know, so what, you know, that might not be too bad. So if we say, okay, we're going to make our target 1284, the previous high, and then, you know, where do I want to put the stop? Well, here was a recent low, 1172. If we go 2% below that, times 0.98, 1148 minus 1220. So we're risking $71 a share or thereabouts. So we're risking about 250 to make about 250. Yeah. So, this is just a different strategy, because we're in class. So we're just trying to figure out like, hey, how could we do this? How might we consider doing this? And so we're going to come to the trade tab. We're going to right click. We're going to buy custom with an OCO bracket because we're going to put in both our target, which is 1284, 1284, and our exit, which is 1148. Now, can we move the stop up as it goes up? Yeah. 11, one too many ones, 48. We're going to make these good till canceled. So, and this will do the math for us. So, we're risking 73 to make 62. Now, some might just say, yeah, I'm not doing that. So either move the stop up lower, move the target up higher. And, we could do that. We could move the target higher. And so, if we wanted to move the target higher, so if I come to edit, how might we determine a higher target? Well, we could bring our friend, Mr. Fibonacci. James has a bit of a crush on the Fibonacci's. So if we let's come from here, because then it pulled back. To here. We could make it 1428, or you could say just from this previous pullback here. I'm having trouble getting it to quite click in. Say from here. So then that target might be 1359, the 161 extension. Oh yeah, somebody said reduce it from 100 to 4. The system would have let me know that. So I'm going to click that. Thank you. To 4. And then if I click anywhere here, it will even them up. So new target 1359. Okay, 1359. And we're going to leave our stop the same. So we're going to come to the trade tab, 1359. Now, when we do something like this, when it passes the swing target, might we move the stop up to the swing target? We could. Now, it might never get there. Like that's a possibility. It might never get to the swing target. Yeah. Okay, confirm and send. So now we're risking 73 to make 137. So we're going to put this in our stocks with targets, and our target is based on the Fib 161 extension, because you might, be looking at this at a later time and going like, where on earth did I come up with that target? I'm not looking at the Hull moving average, Mary Burns. Do you have a time expectation? Well, you know what? How long did it take, for this to move? If I get rid of this strong, we say, how long did it take to move from here to here? So this is another way we could have come up with a target. Is to say, well, this was about $180 move, and that took 9 days, 7 trading days. And this was about $170 move, and that took what, 7 trading days? And that took 6 or 7 trading days. So, if we came out here and came to here and said, okay, I could see it moving, and let's say we give it 9 days again, another $160. So it could take a couple of weeks and it could never get there. So that's another way of determining a target, or instead of drawing our line, We could have just said, okay, this is the shorter line, so we're being more conservative. I'm going to duplicate it. Cancel. I can do this. Duplicate it. In there. You know, so, and again, where would that target be? 13.79. So 20 bucks above our previous target. So, you know, we could have got to that same target on the fib or on a flag target. It's just a different way of calculating it. So did I have a time? Do you feel that this is a flag pattern and you're buying on the dip? So if you're talking about, this is Mary, if we're talking about this, yes, I do definitely see a flag pattern. And then today we have a bullish harami, which is a candle pattern that does not require confirmation. Yeah. Somebody's saying, do you earn more on a short put or a long call vertical? It depends. And did you mean short put vertical or short put? Because we don't get to do a lot of short puts in this class, because if the stock's put to us, we want that to position to be less than 5,000. We have done some, but not as frequently. And with a long call vertical and a short put vertical, the way we place our strikes, the risk reward ratio tends to be lower on the short put vertical, because we want to be conservative in where we place our strikes, than it is on the long call vertical. The long call vertical, we tend to bracket where the stock is currently trading. Okay. So that was Clack. Shall we just go bullish today? Okay, there goes my bearish. You know, we can look at some of the bearish ones. And then last but not least, on the bullish brigade, so this is stock number 4. Again, we have this bullish harami pattern. This stock is up 124%. And so some might say like, ugh, like, hasn't it already had its run? And again, if we come and look at these, you know, are these analysts raising the price target? Well, DBS went from 120 to 184, 113 to 165. Like, these are huge changes. And so they seem to be bullish. Now, mind you, 113, you know, that's way down here. So they were kind of like, the horse is already out of the barn. We're already approaching that 165, right? But Lamb on the 27th increased it to, you know, 184. But if we were bullish on this, again, could we do a long call vertical? You know, and you can do whatever you want. It may work out and it may not. But, you know, if I've got my technical analysis hat on, I'm seeing a bullish harami, you know, and I'm also seeing, you know, it came down to this previous high where it came back. That some might look at this and saying, I'm seeing a bull flag with just a one-day pullback. But most of these pullbacks, you know, here we had 2 days, but we've seen a lot of very short pullbacks in this stock's upward trajectory. And so could we come in, and again, if we're bracketing it, look at maybe the 160 and the 165. Now, again, we've got thousands of contracts, a much tighter bid-ask spread, 30 on this. And if we're looking to buy a vertical, so if we go out just this to the 18th, that's pretty darn bullish, because it only has 18 days. And so we're going to do one there and one in December so we can compare and contrast them. In this one, we can do 2 because that's still under $500. And our single order, we're going to change to first trigger sequence. And this is going to be 360. $360. The advantage is that if this does continue to move to the upside, it may hit our profit target goal sooner. Now, if it doesn't go according to plan, and we're going to compare this to December, and you may say, like, why are you doing this if we're, why not tell us which one is best? Well, because I think we learn by doing. And so we're going to pick these same strikes, the 160 and the 165. Again, 45-cent bid-ask spread, lots of volume on these contracts. 160, 165. So we're at 248. 235, that's even better. 235 times 1.5. 352. And you might say, you're leaving $1.50 on the table. No, my goal is a 50% gain. And so I'm cool to leave, and if you're not cool with that, then do it a different way. This is LRCX. This is the one we were aiming for. Okay, so, and we're going to do 2, 2. So we're risking 470. Putting this in our long call vertical, and we're going to compare to the November expiration. Okay, so I did promise I would show you where to find these example trading plans. I noticed at the beginning of this session that somebody said that they were brand new to this. And so we're going to bring up the Trader Talks from Schwab Coaching. And there is a button in the bottom right part of your screen. And if you haven't subscribed to the channel, it's another free resource. So I encourage you to do that. So if you come to, this is the trade management mini sessions. And I said that I had done a bunch of shorts on candlestick patterns. Here's the bullish Harami. We looked at hammers. So, and there's lots more. I'm probably about halfway through, but these are all just a couple of minutes long. And then for the trading plans, today we did a long call vertical. We did quite a few of those. So if you want to see an example trading plan, the one that we use in this class, and then from that you can, it gives you a framework from which you can create your own example trading plan. Short put verticals, here's one for that. And then there's a stock investing one here, but it isn't necessarily one with a target. I noticed that there is a survey in the chat today. So here's the deal on the survey. If you promise to fill it out, there are 2 questions. 1 is I hated it, 10 is I loved it, and everything in between. And then you can put comments in. So if there are topics you'd like me to cover that I haven't touched on recently, let me know. Yeah, and I promise if you fill it out, I'll read each and every comment. Hit the like button. It helps move this up in the algorithms on YouTube so that more people can find this content. So we'd appreciate that. And then I said, I was torn. I was going to start, with looking at the bearish side of the street. Because there are a lot of stocks that are moving, and we were going to do a bunch of long puts with 1 ATR targets as examples. So, we were looking at Charter. This was sponsored mostly by the letter C, Comcast, Copart, Cintas, and so believe it or not, and all of these, you look at CMCSA, it's not down just a little bit. It's down 27% year to date. So it has been downtrending all year. So if you wanted to do some bearish example trades, this is where one might look. But we did a bunch of bullish trades today. So we did 2 on Google, a long call vertical and a short put vertical. We did 2 on ISRG, again, long call vertical and short put vertical, and we'll compare and contrast. We did a stock position on CLAC with a target. And then we did 2 trades, both long call verticals on Lam Research, LRCX, one with a November expiration and one with a December. So we got lots of comparison trades coming up. Thank you for hanging with me today. Thanks to Kevin for his help in the chat. Thanks for such a robust chat. I'll go back and read all the comments. And if I missed any questions, I'll try and address those in Friday's class. And thanks to the guys behind the scenes for their patience and their professionalism in helping bring this class to life. Thanks, guys. Have an awesome day. Stay tuned. Mr. James Boyd is coming up next.